Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
We have important updates covering Magnum Ventures debt raising, credit rating actions, infrastructure fundraisers, bond issuances, government securities, banking reforms, gold imports, digital lending, defense manufacturing, and capital market developments.
That's right, Vijendra. We'll walk through the biggest debt market stories, explain what they mean for investors, and highlight the key risks and opportunities shaping credit markets.
Magnum Ventures extended a pledge of 83,24,255 shares to raise an additional 50 crore rupees through 18% non-convertible debentures. Total secured debt now stands at 280 crore rupees with promoter support and asset-backed security.
Despite mixed recent performance, long-term investor confidence remains strong, with the stock delivering more than 254.17% returns over 5 years.
Infomerics revised Sri Keshav Cements and Infra Limited's outlook to negative while maintaining the rating at IVR BBB-, affecting bank facilities from Canara Bank.
A negative outlook signals possible credit stress, higher borrowing costs, and tighter access to funding if operational performance does not improve.
CRISIL upgraded Ecoplast Limited from BBB- to BBB with a stable outlook and improved the short-term rating to A3+.
The upgrade reflects stronger financial health, lower borrowing risk, and better access to future credit.
Indus Infrastructure Trust unit holders approved a 5,000 crore rupee fundraise, with overwhelming support for the preferential allotment and related resolutions.
Strong approval levels indicate confidence in governance standards, regulatory compliance, and future infrastructure growth.
Dishman Carbogen AMSIS, Fincare Financial Services, Mufin Green Finance, Vikran Engineering, and several other issuers announced or completed non-convertible debenture transactions across the debt market.
These issuances demonstrate continuing demand for structured debt instruments that offer security, predictable cash flows, and funding flexibility.
Indian government bond yields eased after Reserve Bank of India measures encouraged foreign currency inflows and supported demand for government securities.
However, global risks such as United States inflation, crude oil prices, and currency volatility remain important factors for bond investors.
The government is moving ahead with the sale of a 60.72% stake in IDBI Bank after regulatory progress cleared major hurdles.
Markets view the transaction as an important privatization benchmark that could influence future banking sector reforms.
Gold import duties were increased from 6% to 15% as policymakers seek to reduce imports and manage pressure on the current account deficit.
At the same time, authorities are reviewing gold financing data and considering broader measures to improve external sector stability.
Foreign portfolio investors increased participation in government securities after tax exemptions and expansion of the fully accessible route framework.
These changes strengthen India's position in global bond markets and support inclusion in major international indices.
Major corporate developments included Pakka Limited's refinancing plan, Adani Energy Solutions acquiring IntelliSmart Infrastructure, and expanding investment in smart metering and infrastructure assets.
These moves reflect long-term themes of energy transition, infrastructure modernization, and operational efficiency.
The Ministry of Defense continues promoting innovation through MSMEs, startups, artificial intelligence, robotics, and defense technology initiatives.
Meanwhile, efforts continue to secure broader global participation in Indian debt markets, including progress toward inclusion in major international bond indices.
Additional developments included NABARD bond fundraising, State Bank of India participation in large international acquisition financing, rating actions involving Bharat Bijli, Marksans Pharma, by Kakaji Polymers, and Fitch's assessment of IIFL finance notes.
Finally, India's digital lending sector showed improving asset quality and profitability, while new platforms from CRED and other financial technology companies highlighted a growing focus on transparency, responsible borrowing, and sustainable credit growth. That wraps up today's DebtCircle market update.